So, good morning everyone, or good day, good evening, kung anong oras naman siya pinapanood ngayon. Um, as promised, gagawa ako ng mga video after lang ng compre exam ko. So, tapos ang compre exam ko, makakagawa na ako ng mga video discussion for you guys. So, for this video discussion, I'm going to discuss ratio analysis. It's on our chapter 4, for our chapter 4 to, and um, itong ratio analysis, this one, isa sa pinaka-importanting part ng ating FM, ng ating financial management. Why? Bakit nga ba sobrang importante ng ratio? Magagamit nyo siya hanggang sa mga advanced subjects ng financial management. So, dapat ngayon pa lang that you're starting your financial management journey, ay ma-master nyo na ang ratio analysis. Ano ba ang ratio analysis? Ang ratio analysis is the most powerful tool of financial statement analysis. So, ratio simply means one number expressed in terms of another. Alam naman natin ang ratio. Sa ratio, nakita nyo dyan, if you still remember during your elementary days, meron tayong mga 1:1, or 1:2. Yan yung nagsisignify before ng ratios natin. So, sabi, ang ratio analysis rather is one of the most powerful tool sa ating financial statement analysis. So, meron tayong mga FS na tinatawag na discuss natin before. Meron tayong balance sheet, income statement, cash flow, and so on. So, itong mga financial statement na to means natin kung hindi natin na-applyan ng analysis, at one of the tools nga ng analysis natin is the financial ratio. So, a ratio is a statistical yardstick by means of which relationship between two or more various figures can be compared or measured. So, ginagamit natin ang ratio natin para ma-compare natin yung different figures na meron ang ating financial statements. So, ratios can be found out by dividing one number by the other. So, there are different classifications ng ating ratio. Meron tayong profitability ratio, meron tayong liquidity ratio, meron tayong activity ratio, and meron tayong long-term or leverage ratios. Okay. So, under ng mga ratios na binanggit ko sa classification ng ratios, meron pa tayong different financial ratios with several formulas, and merong mga significance ang bawat ratio na hinahanap natin. So, the first one, so I will just make it fast na lang. Okay. The profitability ratio measures the results of business operations or overall performance and effectiveness of the firm. So, sa profitability ratio, mini-measure natin ang performance and overall effectiveness ng firm. There are several ratios under profitability ratio. So, the first one is the gross profit ratio. To compute for the gross profit ratio, kailangan natin ng gross profit at ng net sales. So, ang gross profit ay makikita natin sa income statement, at ang net sales ay makikita rin natin sa income statement. So, we have this example. I will give you the copy of this one. And what is the significance of gross profit ratio? So, kinukuha natin ang gross profit ratio to get, or to, this ratio reflects the efficiency with which a firm produces its products. So, as the gross profit is found by deducting cost of goods sold from net sales, so ang indication niya, ang significance niya ito. The higher the gross profit ratio, the better it is. There is no standard for the gross profit ratio. Wala namang standard amount kung magkano yung makukuha nyo, but it varies from business to business. However, sabi nga dito, the gross profit earned, so yung gross profit natin na makukuha must be sufficient enough to recover all operating expenses and to build up reserves after paying all the fixed interest and charges and interest charges and dividends. So, to compute for the gross profit, ililas lang naman natin ang ating total sales at ang ating cost of goods sold. Ililas din natin kung meron tayong mga sales returns, sales discounts. So, makukuha na natin yung gross profit. So, walang standard amount sa gross profit ratio and sa gross profit. Ang mahalaga, pag nagkaroon tayo ng gross profit, dapat na-cover up na lahat ng mga operating expenses, the taxes, and the interest. So, dapat may matitira pa tayo sa net income. Kung ang net income natin, for example, ay maging negative, meaning to say, yung gross profit ratio natin is maliit, hindi niya kayang i-cover yung lahat ng mga operating expenses natin. So, the second ratio is the net profit ratio. Ang net profit ratio naman natin is computed by dividing net profit and net sales times 100. So, same example tayo. Check nyo na lang din yung example na to kapag binigay ko sa inyong copy. Then, this ratio measures the overall profitability. Overall profitability na to, and very useful to proprietors or owners of the company. This ratio also indicates the firm's capacity to face adverse economic conditions such as price competition, low demand, and similar situations. So, ano ang significance niya? Hinahanap natin yung overall profitability. At ito yung tinitingnan ng mga proprietors or owners ng company kung ang business ba ay profitable. Paano ang formula niya? Again, net profit divided by the net sales. So, anong indication natin? Anong titingnan natin? The higher the ratio, of course, the better the profitability. So, ano nga ba? Pag tinanong, you may be asking yourself, what is a good profit margin? So, a good profit margin will vary considerably by industry. Nag-iiba-iba yan sa industry. But as a general rule of thumb, a 10% net profit margin is considered average. So, 20% is considered high or good, and a 5% margin is considered as a low profit margin. Again, these guidelines vary widely by industry or company size and may be impacted by a variety of factors. So, general rule of thumb lang, kapag 5% mababa, considered mababa. Kapag 10, considered as average. And kapag 20, considered as mataas. Then, we have the operating ratio. So, to compute for the operating ratio, cost of goods sold plus the operating expenses. So, the sum of it ay i-divide natin sa ating net sales. So, ano ang significance ng ating operating ratio? Operating ratio shows the operational efficiency of the business. So, dito, kino-compute natin kung ano ba yung mga operational expenses na ini-incur ng isang business. So, operational expenses na ini-incur ng business. So, lower operating ratio shows higher operating profit. So, it only means lang na kapag mababa yung nakuha mong operating ratio, ang reflect niyan ay mataas yung profit mo. So, kasi ang operating ratio natin ay kino-compute natin at inaalam natin yung mga operating expenses natin na-incur ng isang business. An operating ratio ranging between 75 to 80% is generally considered as standard for manufacturing concerns. This ratio is considered to be the yardstick of operating efficiency, but it should be used cautiously because it may be affected by a number of uncontrollable factors beyond the control of the firm. Again, the lower the operating ratio shows the higher operating profit. So the higher the operating ratio shows lower operating profit. Okay, we're on the third ratio na. So, return on shareholders' investment or net worth. So, to compute for this one, ang haba niya, net profit after interest and taxes na, ililas na natin yung interest and taxes. So, the net profit na divided by the shareholders' fund. So, ano ang significance ng ating return on shareholders investment or net worth? So, this ratio is one of the most important ratios used for measuring the overall efficiency of the firm. Paano ba pag sinasabi natin efficiency nga pala? Pag sinabi natin efficiency, the proper allocation and the proper use of the resources. This ratio is of great importance to the present and prospective shareholders as well as the management of the company. Again, this ratio reveals how the resources of the firm are being used, and the higher the ratio, the better are the results. So, minemeasure natin kung na-utilize ba ng maayos ng firm, nagagamit ba ng maayos ng firm yung mga resources na available para sa kanila. So, the higher the ratio again, the better. Sa operating ratio lang naman tayo nagkaiba. Kasi sa operating ratio, the lower the operating ratio, of course, the better. Okay. Then, we have return on equity capital. Wait lang ha. Yan. Return on equity capital. To compute for return on equity capital, tax pala to, hindi tax. Okay. Net profit after tax minus preference dividend divided by equity share capital. So, given this example and the calculation, what is the significance of this ratio? Okay, ito yung tinitingnan ng mga equity shareholders, yung mga shareholders ng company who are interested to know the profits earned by the company and those profits which can be made available to pay dividends for them. So, bakit siya importante? Kasi dito malalaman kung magkano ba yung bayaran ng dividend ng isang company. So, kung mataas, syempre yung babayaran, kung mataas yung interest or yung profit na na-earn ng mga shareholders, mas mag-i-invest yung mga shareholders sa isang specific company. Okay, this ratio is similar to the interpretation of the return on shareholders investment. Of course, the higher the ratio, the better it is. Again, the higher the ratio, the higher the return on equity capital, ibig sabihin, the better it is. Mas malaki yung returns na maibibigay mo sa capital na binibigay ng shareholders. Okay? Then we have the dividend yield ratio. Ano naman ang dividend yield ratio? Ang dividend yield ratio, to compute for it, we must divide the dividend per share divided by the market value per share. So, paano naman to? Ano naman ang importance, ano naman ang significance at interpretation ng ratio na to? Again, this ratio helps as intending investor is knowing the effective return he is going to get on the proposed investment. Again, tinitingnan lang din nito yung dividend yield, yung return na makukuha niya, for example, sa proposed investment. Ito yung tinitingnan ng mga investors sa isang specific company kapag mag-i-invest. Shall I invest in this company or not? Titingnan nila yung dividend yield ratio. Of course, the higher the ratio, the better. So, ginagamit natin ng mga financial statements natin, ang mga FS natin to compare ang firm's performance sa other company. For example, Jollibee and McDonald's, yung mga ganyan, yung magkakapareho ng industry, magagamit natin. Saan ba ako mas magandang mag-invest? Sa Jollibee ba or sa McDonald's? By looking at the financial statements lang, kung FS lang, balance sheet and income statement lang yung titingnan mo, hindi mo agad masasabi na kung sino or kung anong company yung mas okay, kung anong company yung mas nagpa-perform ng kung anong company yung mas performing well. However, if you apply ratio analysis, kapag in-apply mo na yung ratios natin, doon mo mas ma-analyze, doon ka mas makakapag-decide whether anong company yung mas okay over the other. Yun naman yung significance ng mga ganitong ratio analysis natin. Ratio analysis din ay ginagamit pala natin, balikan ko lang, ginagamit natin kung hindi man sa firm, i-compare mo yung performance mo for this year or for this period compared last year, compared last 2 years. So, ginagamit ang mga ratios natin. Ano bang ratio ko ngayong taon? Ano bang ratio ko last year? Ano kayang mas magandang performance? Mas nag-perform ba ako ng maayos last year o mas nag-perform ako ng maayos ngayon? Kung hindi maganda yung ratio ko for this year, ano kaya yung pwede kong magawa para mas mag-perform ako ng mas maayos? So, yun yung significance ng ratios natin. So, yun yung ginagamit nga. Bakit kailangan i-compute to? Ayun, yun yung major reasons. So, meron tayong tinatawag, going back, meron tayong tinatawag na earnings per share. Ano naman ang earnings per share natin? Is it recording? Wait lang ha. I-check ko lang kung nagre-record ang aking... Okay, nagre-record naman siya. Okay. Earnings per share. To compute for earnings per share, net profit after tax minus the preference dividend divided by the number of equity share or the number of common shares na meron sa isang company. So, the earnings per share or EPS is a good measure of profitability, and when compared with EPS of similar companies, it gives a view of the comparative earnings or earnings power of the firm. EPS ratio is calculated for the number of years, indicates whether or not the earning power of the firm has increased. It is somehow related. Okay. Pinagpalit ko na ba siya? Okay. Anyways. So, ang earnings per share natin, another measure of profitability. So, ginagamit natin siya para makita natin yung earning power ng kada share na isang company. For example, ano ba example ko dito? So, kada share of common stock, based dito sa computation natin, ay mag-earn ng 25 pesos. So, for example, nag-compute ka ng EPS ng McDonald's, ang taas ng sales nila, ang taas ng revenue, and so on, ang taas ng assets nila. Pero pagdating pala sa earnings per share, 20 pesos lang yung earnings per share nila. Pero pagdating sa Jollibee pa, kahit hindi ganun kataas yung assets na isa ng Jollibee, kahit hindi ganun kataas yung sales nila, pero pagdating sa earnings per share, kasi hindi pwedeng tingnan lang natin yung superficial part. Kailangan applyan natin ang ratio. Pagdating sa earnings per share is 25 pesos. So, kung ako ay investor, mas pipiliin ko yung mas mataas, yung earning power or earnings per share niya na-earn sa kada shares of stock. So, again, the higher the EPS, the better. Then, meron tayong tinatawag na price-earning ratio. Ang price-earning ratio is computed by dividing market price per equity divided by earnings per share. So, gamit na natin ang earnings per share natin, the market price per equity share divided by earnings per share. So, makikita nyo naman yan. Sa mga FS, naka-indicate naman yan. Wala akong FS na naka-prepare ngayon. Pero, given this formula, given this example and this calculation, kapag nakita nyo na ito, magagets nyo din kung paano siya kinocompute. So, anyways, what is the significance of this ratio? So, PE ratio or price earnings ratio, so kanina earnings per share, EPS, ngayon price earning naman, ginagamit natin ang formula ng EPS to compute or ginagamit natin ng EPS to compute for the price earning. Price earnings ratio helps the investor in deciding whether to buy or not the shares of a particular company at a particular market price. So, may market price tayong tinatawag. Okay. So, going back, na-distract ako, may kumatok kasi sa kwarto ko. But anyways, generally, the higher the price-earning ratio, again, the better it is. If price-earning ratio falls, so the management should look into the causes that have resulted into the fall of ratio. Kasi may market price tayo, kino-compare natin yung earnings per share natin sa market price. So, that's under our profitability ratio. We have the gross profit ratio, net profit operating ratio, return on shareholders investment, return on equity capital, dividend yield, dividend payout, earnings per share, and price earnings ratio. So, itong part ito actually, itong mga profitability ratios na to, ito yung medyo mas mga part na masyadong technical. At dito pumapasok yung mga technical aspects ng FM natin. Dito pumapasok yung mga stocks. So, the next measure natin, the next ratio natin is the liquidity ratio. Ito, madaling tandaan tong mga formula ng liquidity ratio. So, under liquidity ratio, sabi dito, as defined, measures the short-term solvency of financial position of the firm. These ratios are calculated to comment upon the short-term paying capacity of a concern or a firm's ability to meet its current obligations. So, ang liquidity ratio, mini-measure natin how liquid is the firm, yung capability ng isang business to pay its short-term liabilities in time using its short-term assets. Okay? So, there are two financial ratio or there are two liquidity ratio na ating gagamitin. Meron tayong current ratio. To compute for the current ratio, simple lang naman siya. We must look to the current assets and the current liabilities. Current assets divided by current liabilities. So, ano ang significance ng ating current ratio? This ratio is a general and quick measure of liquidity of a firm. It is an index of the firm's financial stability, technical solvency, and strength of working capital. A high current ratio is an indication that the firm is liquid and has the ability to pay its current obligations and when they become due. So, simple lang naman ang purpose why are we computing current ratio. We are computing current ratio because we want to know if the firm can pay its current liabilities using its current assets. So, a ratio that is near or equal to 2:1 is considered as a standard or normal or satisfactory. Again, the ratio na 2:1 kapag current ratio, even nga 1:1, okay na yan, at least makakover ng current asset natin. Pero the standard talaga, meaning to say, maganda yung performance ng isang firm kung ang ratio na makukuha nyo is, 2:1. The idea of having a double current asset as compared to current liabilities is to provide for the delays and losses in the realization of current assets. So again, the current ratio, the higher the ratio or the higher the current ratio, the better. Pero, be cautious lang din kasi may mga times na sobrang taas ng current ratio. Halimbawa, ang nakuha mong current ratio is 5:1. So, pag masyadong mataas ang current ratio, hindi din siya maganda implication. Bakit? Ibig sabihin lang nito, hindi na-utilize, hindi nagagamit ng maayos ng firm yung mga current assets niya. For example, sobrang taas pala ng inventory niya. Ibig sabihin, ang taas ng current ratio niya sa part ng inventory, ibig sabihin, hindi na-utilize, hindi nabibenta ng maayos yung mga inventories, and so on. So, the standard is 2:1, but kapag sobrang taas, 6:1 yung ratio na makuha nyo, 7:1, 5:1, ibig sabihin lang din, may mali din sa pag-handle ng mga assets or ng mga current assets ng isang firm. Well, anyways, sunod naman ang ating liquid or acid test or quick ratio. Kahit ano dyan ay tamang tawag. So, kapag kina-compute natin ang quick ratio or the liquid or current acid test ratio, liquid asset divided by current liabilities. So, ang mga liquid assets natin, current assets except inventories and prepaid, actually prepaid expenses din. Okay? Yan. Sa liquid test or liquid ratio natin or asset test ratio natin, from the current asset, inileless natin yung mga non-liquid assets. So, sa current asset, meron tayong mga liquid and non-liquid talaga. Ang mga non-liquid assets natin, ito yung mga hindi or mahirap ma-convert into cash. We have the inventories and the marketable, we have the inventories, hindi marketable securities, and the prepaid expenses. So, ang liquid assets nating mako-consider are the cash, the inventory, and the marketable securities. So, ano naman ang significance at ano ang importance at interpretation ng ating liquid or acid test or quick ratio? So the quick ratio measures the firm's capacity again to pay off current obligations immediately and is more rigorous test of liquidity than current ratio. Sinasabi na mas rigorous siya, more rigorous test of liquidity. Why? Kasi tinatanggal na natin from our current asset yung mga current assets na mahirap i-convert into cash. It is more rigorous test of liquidity than the current ratio because it eliminates inventories and prepaid expenses as a part of current assets. So, ano ba yung mga inventories? Ang inventories natin, for example, bukod dun sa mga pambenta natin, ito yung mga raw materials actually natin for production. Ito yung mga halimbawa sa Jollibee, ito yung tinapay natin, ito yung patties natin. Yun yung mga inventories natin, yung patties, yung tinapay, yung raw chicken na hindi pa luto, yun yung mga inventories natin. So, tinatanggal natin yan. And the prepaid expenses. So, ano naman itong mga prepaid expenses na to? Ang mga prepaid expenses, ito yung mga binayaran mo na pero hindi mo pa tapos i-consume. For example, business permit every year. Every year mo siyang binabayaran. Pero consumable siya at magagamit mo siya for the whole year. So, I know that you are all familiar with such account, prepaid expenses. So, as if naman na mako-convert mo pa ang mga business permit, barangay permit, and so on into cash. So, tinatanggal natin yan. So, ano naman ang standard amount or standard ratio rather ng ating quick ratio? So, nasa na yan? As a convention, generally, a quick ratio of 1:1 is considered to be satisfactory. So, 1:1 is considered as a satisfactory ratio. So, lower than that, meaning to say, hindi na kayang i-sustain ng isang business ang kanyang mga current liabilities, current obligations using their liquid asset. So, 1:1 is the satisfactory. Sorry. So again, kapag masyadong mataas din yung liquid ratio is not a good indication again. Meaning to say, hindi na i-utilize ng maayos at hindi na nagigamit efficiently yung mga assets or yung mga current assets natin. Then we have, konti na lang to. Okay, konti na lang siya. Activity ratio. Ang activity ratio natin is calculated to measure the efficiency with which the resources of a firm have been employed. So, efficiency, ginagamit natin, proper allocation, proper use of all the resources. This ratio are also called the turnover ratios because they indicate the speed with which assets are being turned over into sales. Paggamit ng mga assets natin, pag-convert ng mga assets natin into sales. So, the first one is the inventory turnover ratio. It is one of the best ratio kung gusto mong malaman kung gaano ka-efficient yung firm sa paggamit ng kanilang mga inventories. So, inventory turnover ratio measures the velocity of conversion of inventory into sales. So, meron akong inventory, gaano ko kabilis na ko-convert ang mga inventory ito sa benta ko. So, a low inventory ratio indicates an inefficient management of inventory. So, possible, pag ang taas or mababa ang inventory turnover ratio, meaning to say lang na i-stockan ka ng maraming stock, marami kang inventory hindi napapaikot. So, going back pala, to compute for inventory turnover ratio, cost of sales or cost of goods sold divided by the average inventory or the inventory. So, a low inventory turnover ratio indicates an inefficient management of inventory. A low inventory turnover implies over-investment of inventories. So, ang dami mong biniling tinapay na hindi mo pa nalalabas, ang dami-dami mong biniling specific na item na pangbenta mo pero hindi mo pa nabebenta. So, yun yung ibig sabihin kapag mababa yung turnover or inventory turnover ratio mo. So, over-investment of inventories, possible na dull business, poor quality of goods, stock accumulation of obsolete and slow-moving goods, and low profits compared to total investments. So, there's no standard pa din, pero the high inventory turnover ratio, the better. So, nakalagay dito, this means that an average 1 peso will turn into 4.29 times in sales, and mas magandang magamit ang inventory turnover ratio if you are comparing two firms para malaman mo kung mataas ba or mababa yung inventory turnover ratio mo. Again, Jollibee and McDonald's ang favorite kong example, inventory turnover ratio ng Jollibee at inventory turnover ng McDonald's. So, tingnan mo lang, kung titingnan mo lang ang FS ng isang company, isang ratio lang ng company, hindi magiging ganun ka-comprehensive yung magiging analysis. But if you compare two firms or if you compare two periods, so magkakaroon ng essence ang iyong ratio. Then we have debtors or receivables turnover ratio. Ano naman ng receivables turnover ratio? So, to compute for this one, net credit sales or sales divided by the average receivables or the accounts receivables. Accounts receivable turnover ratio or debtors turnover ratio indicates the number of times the debtor are turned over a year. So, ito naman, ang mini-measure nito actually is kung gaano kadaming beses mong nako-convert yung mga pautang mo or kung gaano kadaming beses mong nasisingil yung mga pagpapautang mo. Yun yung pinaka-simpleng explanation ng receivables turnover ratio mo. So, accounts receivable nga, the higher the value the debtors turnover, the more efficient is the management of debtors or the more liquid the debtors are. So, mini-measure nito kung gaano kabilis or kung gaano kadaming beses mong nasisingil. For example, dito sa example natin, within a year, 5.33 times niya lang nasingil yung pagkakautang sa kanya. Nagagets niyo ba? Kasi ang isip natin or ang mindset natin kapag tayo ay nandito sa receivables turnover for a year. Usually, ang kinocompute natin dito is the performance of a firm sa isang buong taon. So, for example, ito, within 1 year, 5.33 times lang siyang nakapaningil ng pagkakautang sa kanya. So, ano ang ating interpretation? The higher the ratio, or the answer, of course, the better. So, this debtors or receivables turnover ratio is connected to this one, the average collection period. Kung ang debtors or receivables turnover ratio natin ay mini-measure natin kung gaano kadaming beses tayo nakakapaningil ng utang sa isang taon. So, ang average turnover naman natin, or average collection period, is computed by dividing the number of days sa ating receivables turnover ratio. So, this ratio measures the quality of debtors. A short collection period implies prompt payment by the debtors. It reduces the chances of bad debt. Similarly, longer collection period implies too liberal and efficient credit collection performance. It is difficult to provide standard collection period for debtors. So, ang implication nito, halimbawa, kung ang turnover ratio natin ay masyadong mababa, ibig sabihin ng ang average collection natin ay mataas. Ibig sabihin na halimbawa dito, kung 5.33 times lang sa isang taon, meaning to say, every 67 or 68 days lang siyang nakakapaningil ng mga pagkakautang sa kanya. So, the lower the average collection period, the better. So, kung ang average collection mo is 20 days lang, ibig sabihin, mabilis na nakakapagbayad ang iyong mga debtor, yung mga nangungutang sa'yo. Pero kung mataas yung average collection period mo, ibig sabihin lang yan, may mali doon sa might be yung mga nangutang sa'yo, yung mga debtors mo ay hindi liquid enough to pay their debts or masyadong maluwag yung collection, anong tawag dito sa, natin, yung mga, parang collection department ng company. So, nagkakaroon, or yun yung implications, yun yung implications kung bakit mataas or mababa. Either mataas or mababa yung average collection period mo. Ano yung mga pwede mong gawin? Dapat meron kang stringent na collections department, mas strict na mga nagko-collect ng mga receivables mo. Dapat meron kang strict rules for your receivables para maiwasan mo yung bad debts at maiwasan mo yung mataas na average collection period. Then we have, ilan na lang to? 5 na lang. Then we have the creditors or payable turnover ratio. Ano naman ang creditors or payable turnover ratio? To compute for this one, creditors or payable ratio is computed by dividing net credit purchase divided by average trade creditors. Excuse me. So, ano ang mini-measure natin? Counterpart siya ng debtors or receivables turnover. Ito naman, tinitingnan ng mga investors kung usually ito tinitingnan ng mga investors kung gaano ka kabilis magbayad ng mga pagkakautang ng business mo. So, the average payment period ratio represents the number of days by firm to pay its creditors. A high creditors turnover ratio or a lower creditor period signifies that the creditors are being paid promptly. This situation enhances the creditworthiness of the company. However, a very favorable ratio to this effect also shows that the business is not taking the full advantage of credit facilities allowed by the creditors. So, tinitingnan usually, halimbawa, mangungutang yung titingnan ng mga creditors ng isang firm kung ikaw ba ay creditworthy para sa utang, kung papautangan ka ba nila. Kasi, mini-measure ng credits or payable turnover ratio kung gaano kakabilis nagbabayad ng mga payables mo. Yun lang naman siya. Okay. Then we have working capital or turnover ratio. Our working capital turnover ratio is computed by dividing cost of sales and net working capital. So, paano natin kinocompute ang net working capital natin? Ang net working capital is computed by subtracting the current assets to its current liabilities. So, sinasubtract lang natin siya, then, i-divide natin ng cost of sales or cost of goods sold divided by our net working capital. So, ano ang significance ng ating net working capital? Net working capital turnover or the working capital turnover ratio measures the efficiency with which the working capital, itong working capital natin, yung ginagamit natin for our day-to-day operation, is being used by a firm. A high ratio indicates efficient utilization of working capital. So, mataas na ratio, ibig sabihin lang maganda yung efficient yung paggamit natin ng working capital, and a low ratio indicates otherwise. So, kabaliktaran. But a very high working capital turnover ratio may also mean lack of sufficient working capital, which is not a good situation. Then, last, for our activity ratio is the fixed asset turnover. Ang fixed asset turnover naman natin, simple lang to, okay, cost of sales again divided by the net fixed assets. So, ang fixed assets turnover ratio natin signifies, are also known pala as sales to fixed assets. So, it measures the ability and the efficiency and profit earning capacity of our fixed asset. So, profit earning capacity ng ating fixed assets. So, the higher ratio, the greater is the intensive utilization of fixed assets. So, lower ratio means underutilization of fixed assets. So, sa fixed asset turnover ratio lang natin, mini-measure natin kung paano natin na-utilize, kung gaano kalaki yun na parang utilization or kung gaano efficient natin ginagamit yung mga fixed assets na meron tayo. Meron pa actually isa pa, the assets turnover, overall measure naman kung paano natin utilize yung assets natin. Ganun lang din yung formula niya. So, the higher the ratio again, the better. So, for our last na. Ito na yung for long term or the leverage ratio. Ito naman, so, wait lang ha. Ito na yung ating activity ratio. We have inventory, debtors, average collection, creditors payable turnover ratio, working capital ratio, and fixed assets turnover ratio. Dami ng ratio. Then we have the long-term solvency or the leverage ratio. It conveys a firm's ability to meet the interest cost and payment schedules of its long-term obligations. Following are some of the most important long-term solvency leverage ratios. So, dalawa to. Meron tayong debt to equity ratio. How to compute for this one? Total liabilities divided by total shareholders equity. So, ano ang significance ng ating debt to equity ratio? Ang mga leverage ratio natin is for the long-term solvency ng firm. So, debt to equity ratio indicates the proportionate claims of owners and the outsiders against the firm's assets. The purpose is to get the idea of the cushion available to outsiders on the liquidation of the firm. The owners want to do business with maximum of outsiders fund in order to take lesser risk of their investment and to increase their earnings. A ratio of 1:1 is usually considered to be satisfactory, although there cannot be a rule of thumb. Okay. Ang debt to equity ratio lang natin. If you still remember, kapag sa business, meron tayong dalawang sources of fund. We have the debt and the equity or yung utang tsaka yung puhunan. So, this measures kung gaano kalaki yung portion na galing sa utang at kung gaano kalaki yung portion na galing sa puhunan. So, some businesses might prefer na yung business nila ay mas malaki yung galing sa galing sa utang. Kasi kapag usually in finance, kapag debt ratio is high, meaning to say malaki yung utang niya pero mas aggressive yung firm when it comes to business. Yun yung mindset sa FM. However, ang fear kasi kapag sa mga businesses, kung masyadong malaki yung utang, yung fear na baka hindi nila mabayaran, hindi ma-cover up ng earnings nila yung lahat ng inutang nila for their business. So, kung ako, mas prefer ko, since I am also a business, meron akong small business, mas gusto ko na mas mataas or mababa yung debt to equity ratio ko. Mas gusto kong mas malaki yung portion ng puhunan kaysa sa utang. Actually, hindi naman ako nangutang doon sa business ko. Pero kasi kapag yung business ay galing purely or mas malaki yung percentage sa utang, kapag hindi naging ganun ka-profitable yung business, possible na mabankrupt or yung lahat ng kitain ng isang negosyo ay mapunta lang sa pagbabayad, sa pagko-cover ng debt nila. Well, anyways, the last one is the propriety or equity ratio. So, to compute for equity ratio, shareholders' equity divided by total assets. So, halos counterpart lang nito ng debt to equity. Mini-measure nito kung ilang percentage ng assets natin, since ang formula natin for assets is assets equals liability plus shareholders' equity. Kung ilang portion ng ating asset ang galing sa ating shareholders' equity or puhunan. This ratio throws a light to the general financial strength of the company. Of course, the higher the ratio or the shareholders in the capital of the company, the better is the long-term solvency position of the company. Okay, magka-counterpart silang dalawa. So, itong debt to equity ratio, for aggressive lang tayo. Kung ikaw ay push na push, parang for aggressive business mindset, usually, mas gusto nila yung high debt equity ratio. Pero, mas maganda, sabi nga dito, theoretically, if the owner's interest, ibig sabihin, mas mataas yung equity ratio, than of that, the creditors, the financial position is highly solvent. Anyways, okay. And the propriety, yun nga, magkadugtong silang dalawa. So, I guess that's it sa lahat ng ratio natin. Meron tayong long-term solvency or leverage ratio, the debt-to-equity ratio, and propriety or equity ratio. So, apat ulit yan, profitability, liquidity, activity, and leverage ratio. I will give a copy of this one sa inyo para may wag niyo tong iwawalang kopyang to, magagamit niyo to hanggang mag fourth year kayo, hanggang gumraduate na kayo, actually magagamit niyo to. So, I need this one. So, I will give this to you. So, I guess that's it for now para sa ating ratio. Thank you for listening.